Hello, it's Tuesday, September 18th, 2018. I'm Steve Houston with Compass Communications, and I'm here again with Joe Terrell of Terrell and Company, and we're going to chat a little bit about the markets and investing. And Joe, there's a lot of things to talk about, but let's because there's so many, let's boil it down to what are some of the bad things you're seeing in the market now that people should be concerned about?
Well, you know, the interesting thing, Steve, is people don't seem to be too concerned about anything, but you hit on a key part. They should be concerned. The trade wars that are going on, the market participants seem to shrug it off, and it can be an issue. Let's see, certainly last night the United States expanded their tariffs. China this morning expanded their tariffs. This is not the direction you want to head. Jack Ma of Alibaba, as a prominent Chinese businessman, said he thinks this is something that can drag on for years. It's a negative, but the market seems to cast it aside. The other big negative that we have out there is a $1 trillion budget deficit projected for the next government fiscal year, which starts October 1st. Again, the markets seem to be shrugging that aside. Higher inflation figures, interest rates moving up. As of today, the 10-year is over 3% in yield. Fed should raise interest rates again next week. They'll raise them again in December. These are basically the negatives that are out there that people should be paying attention to. Certainly at Terrell and Company we are.
Okay, let's take a look at some of the good things. At least U.S. corporate profits look really good, and corporate America certainly seems to like corporate buybacks. What do you think about all that?
Yes, those are the positives for investments right now. Corporate profits are at record highs. Corporations are actually, in some cases, seeing pretty decent sales gains rather than just manufacturing increased profits through cutting costs. World economy is doing very well. I was in Europe a few weeks ago, very surprised to see how upbeat people are there about their economies, how low unemployment is. A lot of positive things going on in the world economy. That's a positive. Corporate profits are a positive. And you mentioned stock buybacks. A big positive for the investment markets right now is the fact that in the last 10 years, corporate America has bought back enough stock that you could figure ballpark 1/3 of all the stock that used to be available for purchase is gone now. Corporations have retired it. So in some ways, there's a shortage of stock for people to buy. It seems to have somewhat of a floor under prices. So in general, strong economy, stock buybacks, corporate profits doing well. Those are the positives that offset the negatives that I mentioned earlier. But you'd better watch those negatives and don't think that none of those could cause problems for investment markets. That's not true. They certainly could, and a person needs to respect a potential for them to cause problems.
Well, if we look at the good and the bad, what kind of investments should we be focusing on, and what kind of investments should we be avoiding?
Well, you definitely want to avoid any type of fixed income investment with any type of duration to it. As interest rates go back up, fixed income investments will tend to go down in value. The longer the duration, the more it'll go down in value. Said in simple English, you don't want to go tie your money up while rates are still low. Interest rates are going up. Stay very short with your durations and take advantage of the fact that interest rates are rising. In the equity markets, the glamour high-tech stocks, the FANG stocks, if you will, with Facebook and Netflix, Amazon, grossly overpriced. I know they're going up. I know people want to say, well, I'll buy it and it's going to go up. Some people think simply because it's going up, there must be great news or they wouldn't be going up. This is an area to avoid. Look more for the out of favor value stocks that are selling at much more reasonable prices, paying dividends, generating positive cash flows, etc. Very difficult to make a generalized statement about the stock market at the moment because there are too many issues that are grossly overvalued, and there are plenty of issues. We still think the financial stocks, the major banks, are very reasonably priced. Dividends are going up 25 and 50%. Corporate profits for the banks should do well, but the stocks are very reasonably priced. They have not participated this year in gains. We still think the energy is undervalued, pharmaceuticals, but you must avoid the temptation to go chase what's already high in price, thinking it'll go even higher.
Okay, thank you very much, Joe. That's Joe Terrell, founder of Terrilco Company, independent wealth management with $760 million in discretionary assets under management. Joe, let's do this again in October. Let's see, we'll have third quarter earnings in, and we will be on the threshold of midterm elections. And Lord knows that's probably going to add another dynamic. So we'll meet again in maybe about a month or so.
Thanks, Steve. Appreciate it. Thanks, everyone, for tuning in.
Thanks for joining us.